We are here, we are here, we are here. On this amazing day, everyone. This is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back to business. Alright guys, today is 3:12 p.m. The date is February 2nd, 2021. The pair we will be marking up is NZDJPY. That will be the New Zealand dollar versus the Japanese yen. So let's see what's going on in the market. This is NJ on the monthly time frame. And we're going to mark up and let's see what's going on and where the market is heading. Let's identify the market and let's identify where the market is heading, and maybe if we can see if we can identify some type of entry, or to see at least if the entry is ready to go. Alright, so what we see is the market started off in November of 2001 in this area here. From then the market pushed all the way up, so we got a strong push up to the top. So there's a strong uptrend, bullish movement. So from there the market started off here, so it had one push, two push, three push, four pushes, dropped down, retested previous areas of some type of support, came back, pushed up again for the final push that created and hit areas of highest highs, and that's from the months of June and July of 07, and this is the highest the market has ever reached with NJ. From there the market came down, so we can see that the market came down, so it went from an uptrend into a downtrend. So you can see it was like about 1, 2, maybe 3 pushes to the bottom, and then we got a strong push all the way to the bottom, which created the lowest point, and that would be the lowest low point of back in January 09 and February 09. It's something that we can see here from the where price dropped from this area here and came down the downtrend. It broke areas of support. And then once the market reached areas of support of the lowest low, the market came back up, pushed back up once, one hard push, and then it put itself into a consolidation. From there, the market pushed up again, so we have one push, two pushes, 3, 4 to the top, and this is new areas of higher highs. And this is back in June of November and December of 2014. So from there the market dropped down into a downtrend, and then now we have to figure out, okay, what's the market's trying to do. So in this area here we see a pin here, we got a tenor here, we have another tenor here, we have a tenor here, and tenor here. So this showing that the price is it wants to turn around, it's losing some type of momentum, and it wants to turn around, but it hasn't in this area here. But then once it broke through resistance, it came back down, did a hard drop, and then we can see where it tried again. Now it was trying to push up from this tenor, but it wasn't, so it created a W, and we have another tenor here, and now we see that push up. Now we can see that the market is trying to go into this possible uptrend, and we can see that price broke previous areas of this resistance line I just placed, so it broke through it, and now it's trying to retest the resistance line to shoot up further. But that's what it looks like on a monthly. I don't know what it looks like on a daily. I should say on the weekly. So what we're going to do is let's go down to the weekly and let's see if we can identify in the market what's going on. But before I go down to the weekly, let me go back to the monthly. And we did say we are in some type of uptrend, or we feel like we're in some type of uptrend. So we've seen this attended to the bottom and the market's pushing up. So if we draw our trend lines going up, and let's this time, I know we're doing one side, but let's do it on both sides this time. So we can see that the market is in a trend. So if I had to take one of these trend lines off, it would be the top, and I kind of keep the bottom of an uptrend. And if it's a downtrend, I keep the top of the resistance side of the downtrend and remove the left side of the trend line of the downtrend. Alright, so from here the market is in an uptrend. We see that, and then we have to find areas of where the market is going to break through at, or what areas the market may break through at. So this area, like an area where the market can break through. From there, if the market did break this area and it went up further, the next area will be somewhere probably here. And let's say if the market went down and then break through this first area of this resistance and went down, it will probably go back down to this support line before it break back up, or breaks down further. So we're gonna change. I'm gonna change the SR lines to green, going up. So market is trying to break through and go up further. Change those green. If the market goes down, it's going to run into the red support lines. So that's the monthly. Let's go down to the weekly. Let's see what we can see. If we take a closer look, the last 3 to 4 candles, let's see what it's doing. So we have 3 pushes, 3 solid red-green candles that's pushing up. Price came up, retested previous areas with 3 strong pushes to the upside, and it's trying to reach this resistance. So it's bullish. So we can see that it looked like it has been a touch. There's probably 3 touches here. We can see a touch here with this wick. There's a touch here with this candle wick, and there's a touch here. It was trying to touch with this candle wick, but this candle wick is still active. So there's a chance it's still this body of this candle, this last green candle, can still go up to this resistance line for a 3rd touch. So it looks like it's kind of trying to have some issues going up. It may turn around, come back down, and go back up. But right now, it's still in a bullish uptrend until we see the market turn around and go down. If we go to the daily, we can take a closer look to see what's going on. So we can now, on the daily, we can see that the market is really just putting itself in some type of range. So if we range it this way, if we do if we draw an SR line there and an SR line here, we can see that what it's doing. So the market, I'll do another one here so you guys can see what I'm doing. So the market, let's do another one here too. Why not? Why not? More information, right? So on the daily, so what the market did came from the bottom here. Once it came from the bottom, it came up, broke the support. It looked like it did a W here, pushed up further, bounced around here, broke up further, bounced around here, and it looked like it's probably going to break up further and then keep on going up. If it don't, then there's a chance that the market would just break through like it did, retest areas of support. It broke out, shot up, and there's a chance that it can come back down to go back up. Or the market can go down and break through further and find lower levels to reach back to this trend line before it breaks back up. You never know what the market's going to do. We never predict the market. We just wait for the market to do what it do. And for us to identify what the market is doing is just to look at the market. If you want a daily time frame, guys, if you guys on a daily time frame, and you guys see when this last candle closed out, which it says here 1 hour and 37 minutes, that will be at what, 5 p.m. You can watch the market on the daily time frame every single day, one time at 5 p.m. So we can see that the market, let's get back to the market, so we can see that the market shot up, came down, broke through. Let's go down one more to the 4 hour and see what's going on in the market. So once again, the market isn't doing anything. We can just see it's ranging, it's bouncing. So I would either wait until the market break up through the green line or break down. At the moment, I don't see a major move for a trade to take. If you want to jump in here and get these little bit of pips, or these pips is still pips, and take it from this area here, it may go down to take it to the bottom, to take it back up. You can, but if not, you can just wait for the. We can just wait for the market to fully break out. We can just wait for the market. I'm trying to clear the screen. 1 second. We trying to wait for the market to break down and then break out. So let's take a look at the 4 hour. We looked at the 4 hour. So this is a waiting game. So we're going to have to wait to see if the market's either going to break out of our green line that's in this area here, or it's going to break down of our support and then break down further. So if it breaks up, we can see that it's going to head up further. So we go to the weekly time frame. You can go to let's go to daily time frame. Let's take a look at daily time frame, and we can see that if the market breaks up this blue line and this green line behind it, it's going to go up further, and that will give us a total of if we scrap our start position, drop it here for that breakout. If it goes up, that'll give us a total of about 302 pips over time. Then I could take days. But that's an amazing move, 302 pips. That's an amazing move. Alright guys, let's take a look at the Forex pattern cheat sheet. Breaks down some of these patterns for you guys to see what's going on in the market, to give you guys more of a visualization to what's going on in the market. So all in here, there's a whole bunch of patterns. There's W, there's M's, there's engulfings, and so on. So let's see if I can break down some of this stuff for you guys, some of these patterns, so you can identify it on the chart and also identify it when you're looking at the market. So let's take a look at the double top atom and atom. Okay, what is the meaning of atom and atom? And I could break that down to your other opposite page too. So I'll do a little quick drawing for you guys right in this area here. So if we're looking at the double top atom, all the double top atom is price is coming up from somewhere. It reached its highest peak of its highest high. It wasn't able to hold, so it came back down to retest previous of support. Once it retested previous of support, it wasn't able to break down further, so the market just broke up, came up, reached higher highs again to come back down. So all that shape is, this pattern is an M. So I'm going to show you guys the example. Switch to NJ. We're going to use this white chart. So all the market did was it came. So let's say we got some visible horizontal lines here. All the market did was come up from somewhere, from the bottom, reached this higher high, wasn't able to hold. The market came back down, broke through support once, broke through support twice, and then it came back up, broke through resistance once, broke through the second resistance to reach its highest high, wasn't able to hold, so the market came back down, all the way back down from where it came from somewhere at the bottom. And what we see an M pattern. All that is an M. You go back to the double tops, atoms, and atoms, that's all it is, an M pattern. Let's check out something that we haven't checked out before. So let's check out the diamond bottoms, and I'll break that down to you guys what that is. So the diamond bottom, all the diamond bottom is the market is coming down from somewhere. it put itself in basically in a diamond range. It don't have to look like a diamond. Look like a diamond here. It could look like a square, a rectangle. But the overall concept, the market is in a range. And then once the market's in a range, all it did was just bounce around in this for days or weeks or months or whatever it is, hours. And then the market broke out and went up. And that's in the direction it came from. So I'll show you guys the example of what that is. That's all the market is really doing is, I'm just gonna say all the market is really doing. All the market is doing is coming down from somewhere, and I'm gonna put a square here because I want to show you guys the shapes that I can change it to. So all the market is doing is coming down from somewhere. It does something in here and then break right back out. So that something in here could be anything. It can be a W before it breaks out. It could be a triple bottom. It can be a W. It could be one of these. It can be a triple dot bottom, which I did. It can be a quadruple bottom. You can see 4 of them. So you can see 4 dips. So it's 1, 2, 3, 4. So no matter what the shape is, but the picture from the Forex pattern sheet always showed was that the market came down from somewhere and it did a line. So it probably came right back up, came back down, came back up, came back down, up, down, up, down, up, broke out of this area here and went straight up. That's all that market did. So when you look at it on here, that's all that is, the diamond bottom. Price came down from somewhere, up, down, up, down, up, down, in a big consolidation area before it broke out. Diamond pattern. Let's take a look at let's see what will be the last one, the head and shoulders tops. So the head and shoulders tops is exactly, it's just a reversal of what we just talked about. So we see that the price coming down from somewhere, it reached its high at one point, wasn't able to hold, came back down, reached its high again for the second time, wasn't able to hold, reached its high for the third time, wasn't able to hold, came back down in the direction, it came all the way back down. So it dropped all the way back down to the lowest low, wherever that area was. And all that is here, all that is a triple top. That's a head and shoulders, triple top, whatever you want to call it. It's all the same thing. The only thing is it just won't look the same when you're looking at it in the market. So what we see here is we see let's say three peaks. So it can look like this. Market coming up from somewhere, reaches highest high, came back down, reaches highest high for a second time, came back down, reaches high for a third time, wasn't able to break through. So what it did, the market came back down, did a full reverse and came back down, dropped to previous areas. That's all that is. You got 3 peaks. 1, 2, 3 peaks. That's the same thing we see on the other side right here. Market came up. Close this. Market came up, came down, came up, came down, came up, came down. Head and shoulders. But you see how everything lined up. So head and shoulders wouldn't look as clean. So all the time. Sometimes you can see head and shoulders. So head and shoulders sometimes in the market looks something like this. You may see the left shoulder come up, just come back down, and then you'll see the head come up, come back down, and then you see the right shoulder come up a little bit before it come back down. So it could be a straight drop back down. So it's never always even. Sometimes this area may line up with the left shoulder may line up with the right shoulder. The left shoulder may be closer to the head. The right shoulder may be a little further down. But no matter what, the more you look at the market, the more you'll be able to identify what you're looking at from the difference between triple top or a head and shoulders pattern. But it's all the same thing. The more you look for the patterns and look at the patterns, the more you understand the market. For some Forex 101 techniques, I would call it for right now. For you guys, if you want to get into the market, you want to learn to trade, you want to learn to invest, you want to put your money somewhere, and learn it for yourself, and not just taking money and just throwing it somewhere where you don't even know anything about it. So what you can do is you can just go to this site here, type in the pair like we did today, NZDJPY. Go to the time frames, monthly, weekly, daily, 4 hours, 2 hours. Stop at the daily. Let me clean my screen up. So you can stop at the daily and you can see that every candle, so what this means is if you go to the daily time frame, each and every candle you see here took 1 day to form. This took 1 day, that took 1 day, this one took 1 day, that took 1 day, and so on. So if each candle took 1 day to form, each candle opens up at 5 p.m. and it closes at 5 p.m. every single day, except for the market's closed. The market's closed Saturday and Sunday. So Monday through Friday, if you guys work a 9 to 5 or you work a schedule where you can't watch the market all the time, you don't have to. Every day, 5 p.m. Go to TradingView. Go online here. Go to this site. Go to NJ. Look at it on the daily. See what the market's doing. If the market came up, came down, came up, and we see a red candle form down, and the red candle engulf over the green one per se, that means the market's going to go down. So you can take the entry and ride it down until you see a reversal happening. And then you get out to trade. Plain and simple. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching.